The world stage is currently witnessing a multitude of significant events, each reshaping the global landscape in profound ways. From geopolitical shifts and economic fluctuations to social transformations and environmental concerns, the pace of change is accelerating. Understanding these complex dynamics is crucial. Today, we delve into a pressing issue that demands our attention: the potential consequences of a large-scale economic downturn, specifically focusing on which segments of the American population might face the most immediate and severe repercussions. We will explore the underlying factors contributing to their vulnerability and examine the potential chain of events. Detailed conclusions based on this analysis will be presented at the end of this video. Imagine this scenario. You awaken tomorrow to find that the foundations of your life, everything you relied upon, have vanished. Your employment, your residence, your accumulated savings, all gone in an instant. In the context of contemporary America, such a complete and sudden collapse might seem inconceivable, almost like a dystopian fiction. We are accustomed to a certain level of stability, infrastructure, and economic predictability. However, the annals of history provide stark reminders that societal and economic collapses can indeed occur, often with a speed that defies expectations and catches populations unprepared. History teaches us that stability is not guaranteed, and that complex systems can unravel unexpectedly. Major empires and nations have faced periods of rapid decline, triggered by a confluence of factors like economic crises, resource depletion, social unrest, or external shocks. While modern America possesses robust institutions and a complex economy, it is not immune to systemic risks. Understanding these historical precedents is not about fear-mongering, but about recognizing that preparedness and awareness are vital. Ignoring the potential for severe disruption because it feels unlikely can lead to catastrophic consequences for individuals and communities when the unforeseen happens. The potential for such a rapid downturn means millions could be thrust into precarious situations, facing homelessness almost overnight. Consider the elderly population. As America grapples with escalating living expenses and pervasive economic uncertainty, senior citizens have gradually emerged as one of the most susceptible demographics, often overlooked in broader economic discussions. This vulnerability stems from a confluence of factors that place them in a precarious financial position, despite decades of contribution to society. Many individuals in this age group dedicated years, often their entire working lives, to their careers, raising families, and diligently contributing to social safety net systems like Social Security and Medicare. They operated under the belief, fostered by societal promises, that these systems would provide a reliable cushion, ensuring security and dignity in their later years. They planned their retirements based on these expected benefits, trusting that their contributions would translate into a stable income stream when they could no longer work. However, the current economic climate is straining these very systems and eroding the purchasing power of the benefits they provide, challenging the long-held promise of a secure retirement for a growing number of seniors. The promise of security in old age is increasingly becoming fragile. Data reveals a concerning reality. Nearly 40% of senior citizens depend almost entirely on Social Security benefits for their income. The average monthly payment hovers around $1,800. This amount starkly contrasts with the surging cost of living, particularly housing. Average rental prices in many areas have climbed beyond $3,000 per month, immediately creating an insurmountable gap for those relying solely on Social Security. This fixed income, once envisioned as adequate, now falls drastically short of covering basic necessities in numerous parts of the country. The disparity between income and essential expenses leaves little to no margin for error or unexpected costs, pushing many seniors towards financial instability. Furthermore, the financial pressures on the elderly extend far beyond housing. Essential expenses like medical bills, food, utilities, and transportation costs continue to rise, relentlessly consuming their limited budgets. Healthcare costs, in particular, can be substantial for seniors, even with Medicare coverage, due to premiums, deductibles, co-pays, and uncovered services like long-term care or certain prescription drugs. The price of groceries, energy for heating and cooling, and transportation Whether personal vehicle costs or public transit fares further strain their finances. This constant financial stretch leaves virtually no room for unforeseen circumstances. A single significant financial shock, an unexpected hospital stay generating large medical bills, a sudden and steep rent increase, necessary home repairs, or even cuts to social programs they rely on, can become the tipping point, pushing them from a state of financial precariousness into outright homelessness. Unlike younger individuals who might have the physical capacity or opportunity to supplement their income through additional work or relocate to areas with lower living costs, seniors face significant barriers. Age discrimination in employment, physical limitations, and established community ties often make finding extra work or moving impractical or impossible. Their health issues not only generate high costs, but also limit their ability to work or adapt to changing circumstances. Consequently, recovering from a financial setback becomes an immensely difficult, almost insurmountable challenge for many elderly individuals. Across the nation, particularly in states with high living costs like California and Arizona, or even in areas previously considered affordable, the signs of this crisis are becoming increasingly visible. It is no longer uncommon to witness elderly Americans living out of their vehicles, setting up makeshift shelters in parking lots, or joining long queues for limited beds in homeless shelters. These are individuals who represent the generation that built much of modern America: teachers, factory workers, nurses, veterans, and many others. They contributed throughout their lives, expecting a measure of security in return. Now, tragically, many find themselves abandoned precisely when they are most vulnerable and in need of support. Should America experience a profound economic collapse, the elderly population would not merely struggle. Many risk losing everything they spent a lifetime accumulating: their homes, their savings, their sense of security. All could evaporate. The most heartbreaking aspect of this situation is that once they fall into homelessness, the existing safety nets are often inadequate or difficult to access, offering very few pathways back to stability. Their situation serves as a harsh reminder. In a faltering economy, growing old, which should be a time of rest and reflection, could tragically become the greatest financial risk of all. Please remember to watch this video until the end, where we will provide concluding thoughts on these critical issues. Young adults today are entering an economic environment that ranks among the most challenging in recent American history. They face a landscape marked by unprecedented financial burdens and obstacles significantly different from those encountered by previous generations. Central to their predicament is a burden that past generations never had to confront on this scale: massive student loan debt. This generation was consistently told that higher education was the definitive pathway to success and financial security. Encouraged by societal narratives, and often by guidance counselors and family, they were led to believe that investing time and significant financial resources, often borrowed, into obtaining degrees would guarantee stable, well-paying jobs and a secure financial future. They pursued higher education with the expectation of upward mobility, diligently worked towards their degrees, and took on substantial loans, trusting the established correlation between education and economic prosperity. The reality they encountered upon graduation, however, has starkly diverged from this promise, leaving many grappling with a challenging economic reality that was not part of the initial equation. The discrepancy between the promise and the reality is stark. In the year 2024, the total outstanding student loan debt in the United States has ballooned past an astounding $1.77 trillion. The average individual borrower is burdened with a debt exceeding $37,000. For many, particularly those who pursued graduate or professional degrees, this figure is significantly higher, often double or even triple the average amount. This enormous debt load creates a significant financial drag from the very beginning of their careers. Meanwhile, the anticipated rewards in the job market have often failed to materialize at the expected level. Starting salaries in numerous fields have not kept pace with inflation or the rising cost of living, and critically, they haven't kept pace with the escalating cost of the education required to obtain them. Graduates frequently find themselves in entry-level positions where wages barely scrape above minimum wage, especially in fields that have become oversaturated with qualified candidates. This combination of high debt and relatively low starting income creates an immediate and often long-lasting financial squeeze. The current job market further compounds these challenges. Many young adults are entering a workforce increasingly characterized by contract gigs, freelance work, and other forms of unstable employment, often referred to as the gig economy. While offering flexibility, these arrangements typically lack the traditional benefits and security associated with full-time employment, such as health insurance, retirement plans, paid sick leave, or unemployment benefits. The competition for even these less secure positions can be fierce. Unlike older generations who may have accumulated assets over time, such as home equity or substantial savings, these young adults typically have no such financial cushion to fall back on. Their financial landscape is dominated not by assets, but by liabilities, primarily the relentless monthly student loan payments that often feel inescapable, continuing regardless of employment status or income level. Even bankruptcy offers little relief, as most student loan debt is notoriously difficult, if not impossible, to discharge through bankruptcy proceedings. This leaves them uniquely exposed to economic shocks. Should a significant economic collapse occur, this demographic would be among the first and most severely impacted. Layoffs historically hit entry-level and less senior positions hardest and fastest. As job opportunities vanish and rent costs potentially continue their upward trend, these young adults burdened by debt and lacking savings would face immense pressure. Missing even a few paychecks could rapidly lead to eviction, homelessness, and the crushing weight of accumulating debt and interest, making recovery extraordinarily difficult. Many are already living paycheck to paycheck, juggling multiple jobs simply to cover basic living expenses and minimum debt payments. The financial strain forces them to postpone major life milestones that previous generations often took for granted, such as buying a home, starting a family, or even achieving basic financial independence by moving out of their parents' houses. They are trapped in a system that seems almost designed for them to fail, where the educational investment meant to secure their future has instead become an anchor weighing them down. If a true economic collapse materializes, they won't just lose their current financial footing. They will lose the fragile beginnings of the lives they have been struggling so hard to build, abandoned by a system at the very moment they need assistance the most. The service industry and the burgeoning gig economy form the operational backbone of daily life in contemporary America. These sectors encompass a vast array of workers who ensure the smooth functioning of our society, yet they often face significant economic instability. Think about the individuals you interact with daily: the cashier processing your grocery purchase, the barista preparing your morning coffee, the warehouse worker packing your online order, the rideshare driver navigating you through traffic, or the food delivery person bringing a meal to your door. These workers, numbering in the tens of millions, are essential cogs in the machine of the American economy, keeping the country running through their labor. However, beneath the surface of their constant activity lies a harsh economic reality for many within these sectors. A significant portion of these jobs are characterized by low wages, inconsistent hours, and a distinct lack of benefits and long-term security. The brutal truth is that while their work is essential, the economic system often treats the workers themselves as disposable components. Most workers in the service and gig sectors are living paycheck to paycheck, trapped in a cycle of financial vulnerability. There is often no buffer in the form of savings, no employer-sponsored health insurance to cover medical emergencies, no retirement plan building towards future security, and limited access to paid time off or sick leave. Job security is frequently tenuous, with employment subject to fluctuating consumer demand, seasonal changes, or the arbitrary decisions of platform algorithms in the case of gig workers. According to recent statistics, nearly 60 million Americans are employed within the service sector. A large percentage of these individuals earn wages less than $15 per hour. At such pay rates, affording basic necessities like housing, food, transportation, and healthcare becomes a constant struggle, particularly in metropolitan areas where living costs are high. Many are forced to work multiple jobs or extremely long hours simply to make ends meet, leaving little time or energy for personal development education, or family. They operate without the safety net that protects workers in more traditional, often unionized, sectors. When economic conditions are relatively stable, this inherent instability might be manageable, albeit stressful. Workers can piece together enough hours or gigs to cover their immediate expenses. However, this delicate balance is highly susceptible to disruption. If America were to plunge into a deep recession or face a more severe economic collapse, service and gig workers would be among the very first casualties. Consumer spending is typically the first thing to contract during economic downturns. As households tighten their belts, discretionary spending on things like dining out, retail purchases, travel, and entertainment plummets. This directly impacts restaurants, retail stores, hotels, and related businesses, leading to swift closures and widespread layoffs among service staff. Restaurants shutter, retail shops drastically cut staff hours or close locations entirely, and jobs related to travel and hospitality evaporate almost instantaneously. The impact ripples through the economy, hitting these low-wage workers hardest. For gig workers, rideshare drivers, food delivery personnel, freelance creatives, and others relying on platform-based work, an economic downturn translates into a sharp decline in demand for their services. Contracts dry up as businesses and individuals cut back on non-essential spending. The pool of available work shrinks dramatically, while the number of people competing for the remaining gigs may even increase as those laid off from traditional jobs seek alternative income sources. This combination of falling demand and increased competition further drives down potential earnings, making it impossible for many to sustain themselves. Unlike full-time employees in more stable sectors, these workers typically lack access to severance packages or unemployment benefits that could provide a temporary cushion during job loss. When they fall, there is often nothing to catch them. Many service workers already operate with razor-thin budgets, often sharing cramped apartments with multiple roommates or relying on precarious housing situations to afford rent. They lack savings or any significant financial cushion. Consequently, even a minor disruption, a reduction in hours, the loss of one gig out of several, an unexpected medical bill, or a car repair, can rapidly escalate into a full-blown crisis, pushing them towards eviction and homelessness. In a major economic collapse, the scale of homelessness originating from this group could be truly staggering, overwhelming existing support systems. These individuals are among the hardest working people in the country, often performing physically demanding or emotionally taxing jobs with minimal reward or recognition. They smile while serving coffee or stocking shelves, masking the underlying financial anxiety. Yet the economic structure often treats them as expendable. When the economic foundation crumbles, they are hit first, hit hardest, and are too often left invisible in the wreckage, forgotten by the very society their labor helps sustain. Single parents navigate an incredibly demanding reality even in stable economic times, performing a constant tightrope walk to meet the needs of their families. They single-handedly manage the complex interplay of work, childcare, household finances, and the myriad responsibilities that come with raising children, often without a consistent support system. This daily balancing act leaves them particularly exposed to economic shocks. For the over 11 million single-parent households in the United States, the vast majority of which, around 80%, are headed by women, life is a continuous juggling act. They are simultaneously the primary breadwinners and the primary caregivers, roles that often pull them in conflicting directions. Many lack reliable and affordable childcare, forcing them to make difficult choices between working enough hours to pay the bills and being present for their children. Financial support from a co-parent may be inconsistent or entirely absent, placing the full economic burden squarely on their shoulders. Support from extended family or government assistance programs can also be limited or difficult to access, leaving them with few resources to fall back on. Every dollar earned by a single parent is typically stretched to its absolute limit, meticulously allocated to cover rent or mortgage payments, groceries, utilities, clothing, school supplies, and transportation. Every hour of their day is accounted for, divided between employment, commuting, childcare duties, household chores, and attempting to find moments for rest. There is rarely any slack in their schedules or budgets. This leaves them acutely vulnerable to any unexpected expense or loss of income. An unforeseen event, a medical emergency for themselves or a child, a sudden rent hike, a major car repair preventing them from getting to work, or a reduction in work hours, can quickly spiral into a catastrophic situation. These are not minor inconveniences. They are potential triggers for financial ruin and homelessness. Unlike dual-income households or individuals without dependents, single parents lack the inherent buffer that a second income or fewer responsibilities might provide. They don't have the luxury of easily relocating to a cheaper area if housing costs become unmanageable, as uprooting children from schools and support networks presents significant challenges. Working overtime to make up for lost income is often impossible due to childcare constraints. If layoffs sweep through industries where many single parents work, such as the service sector, retail, or healthcare support roles, the consequences are immediate and severe. Losing their sole source of income, even temporarily, can mean an inability to pay rent or mortgage, leading directly to eviction and homelessness. There is simply no financial cushion to absorb such a blow. Furthermore, many government assistance programs designed to help low-income families have strict income limits and complex eligibility requirements. These rules can create a cruel paradox known as the welfare cliff, or benefits cliff. Earning even slightly too much money, perhaps through a small raise or taking on extra hours, can result in a sudden and complete loss of essential benefits like housing assistance, food stamps, SNAP, or child care subsidies. This loss of benefits can outweigh the increase in earnings, effectively penalizing them for trying to improve their financial situation and trapping them in a cycle of poverty. They find themselves in an impossible bind, technically too rich to qualify for necessary help, but realistically too poor to survive without it. The lack of affordable, high-quality childcare is another major obstacle. Without reliable care, single parents cannot maintain stable employment or pursue education or training to improve their job prospects. Similarly, the scarcity of affordable housing in many communities means that even those working full-time often struggle to keep a roof over their heads, dedicating disproportionate amounts of their income to rent. In the event of a large-scale economic collapse, the existing support systems would likely be overwhelmed. Shelters, already operating at capacity in many areas, would fill up rapidly. Emergency housing resources would be stretched beyond their limits. Single parents and their children, already living on the edge, could find themselves with nowhere to turn. They might end up living in cars, couch surfing between friends or relatives, if available, or being forced into dangerous or unstable living situations simply to avoid the streets. These parents represent some of the most resilient and determined individuals in society, fighting tirelessly every day against significant odds to provide a better future for their children. They navigate immense challenges with strength and perseverance. However, even the strongest individuals need support when the systems around them fail. If America collapses, single parents, despite their resilience, will be among the first to face the devastating consequences, paying the heaviest price for systemic failures they did not create. Former industrial workers constitute a significant group representing a proud yet increasingly vulnerable chapter of American economic history. They are the embodiment of an era when American manufacturing was a global powerhouse, providing stable, well-paying jobs that supported families and built strong middle-class communities. Today, however, many of these workers and the communities they live in symbolize one of the nation's most pressing economic challenges: the aftermath of deindustrialization and the struggle to adapt to a vastly changed economic landscape. These are the men and women who labored in the steel mills, auto plants, coal mines, and factories that were once the engines of the American economy. Entire towns and regions, particularly across the Rust Belt, states like Pennsylvania, Ohio, Michigan, Indiana, and Illinois, grew and thrived around these industries. These jobs offered more than just a paycheck. They provided good wages, comprehensive benefits like health insurance and pensions, often secured through strong union representation, and instilled a deep sense of purpose and community pride for millions of working-class families. They were the backbone of the American dream for generations. However, Beginning in the latter half of the 20th century and accelerating in recent decades, powerful economic forces, globalization, automation, and outsourcing began to reshape the industrial landscape. Globalization led to increased competition from countries with lower labor costs, prompting many companies to move production overseas. Automation replaced human workers with machines on assembly lines and in various manufacturing processes. Outsourcing further shifted jobs to external contractors, often non-unionized or located abroad. These trends combined to gut American manufacturing, leading to widespread factory closures and devastating job losses. Since the year 2000 alone, estimates indicate that over 5 million manufacturing jobs have vanished in the United States. With the disappearance of these jobs went not only the paychecks but also the stability, the security, the benefits, and often the very identity of entire communities that had been built around them. Former industrial hubs like Detroit, Michigan, Buffalo, New York, Gary, Indiana, and countless smaller towns across the industrial heartland experienced precipitous declines, transforming from bustling centers of production into veritable ghost towns grappling with population loss, decaying infrastructure, and widespread poverty almost overnight. For many of the workers left behind by these seismic shifts, viable alternative options have been scarce. Their skills, honed over years in specific industrial roles, often do not translate easily to the demands of the new service-based or technology-driven economy. Retraining programs, where available, have had mixed success, and age discrimination can be a significant barrier for older workers seeking new careers. Many found themselves relegated to low-wage service jobs, offering drastically lower pay, few or no benefits, and little of the security or dignity they once knew. The economic devastation has also had profound social consequences in these communities, contributing to issues like the opioid epidemic, declining public health outcomes, and a sense of hopelessness. Today, many former industrial workers are middle-aged or older. They are often too young to qualify for retirement benefits like Social Security, but find themselves too old, or lacking the requisite skills, to easily re-enter the workforce in a meaningful way, especially in regions where job growth is concentrated in different sectors. They frequently face chronic unemployment or underemployment, working part-time or in temporary positions far below their previous earning potential. Many struggle to pay mortgages on homes whose values have plummeted due to the local economic decline, trapping them financially. They live in towns where economic opportunity dried up years ago, with limited prospects for recovery. Any savings they might have accumulated during their working years, if they had any, have likely been depleted long ago due to extended periods of unemployment or low wages. Compounding these economic challenges are potential health issues. Years of physically demanding labor in factories or mines can lead to chronic health problems, further hindering their ability to work and increasing their healthcare costs. Access to affordable healthcare can also be a challenge, especially if they lost employer-sponsored insurance along with their jobs. In the event of a major national economic collapse, these former industrial workers are exceptionally vulnerable. They have already endured one profound economic disaster: the collapse of the industries that sustained them and their communities. Without significant policy interventions or robust support systems tailored to their unique circumstances, a second major economic downturn would likely be devastating. It could push those who are barely holding on financially into a freefall from which recovery seems almost impossible. They represent a generation that adhered to the work ethic of their time, contributed significantly to the nation's economic infrastructure, and played by the rules of the system as they understood them, only to be largely abandoned when global economic winds shifted. Their story is a poignant reminder of what happens when a country neglects the people and communities that formed its industrial foundation. Instead of being celebrated for their past contributions, too many now serve as a warning sign of the consequences of economic transition without adequate support for those left behind. Veterans, rightfully honored as heroes for their service and sacrifice, often face a complex and challenging reality upon returning to civilian life. While celebrated in parades and public discourse, the transition can be fraught with difficulties, leaving many susceptible to economic hardship and instability. The harsh truth is that despite their dedication and the skills acquired during military service, a significant number of veterans struggle to find their footing back home, placing them among the groups most vulnerable in the face of an economic collapse. After dedicating years, sometimes decades of their lives to serving the United States, often enduring multiple deployments and experiencing the unique stresses and traumas of military life, many veterans find the adjustment to the civilian world profoundly difficult. Finding stable, meaningful employment can be a major hurdle. Skills learned in specialized military roles do not always translate directly or are not always recognized by civilian employers. Some veterans, particularly those who enlisted directly out of high school, may lack the formal civilian education or credentials often required in today's job market. They might never have had the opportunity to build a traditional civilian career path, putting them at a disadvantage when competing for jobs. Furthermore, despite efforts to combat it, some employers may harbor biases or misunderstandings about military experience, overlooking the valuable leadership, discipline, and technical skills veterans possess. Mental health challenges significantly compound the problem for many. A substantial number of veterans grapple with conditions like post-traumatic stress disorder, PTSD, depression, anxiety, and traumatic brain injury, TBI, often stemming from combat exposure or other traumatic experiences during their service. These invisible wounds can profoundly impact their ability to maintain employment, manage finances, sustain relationships, and navigate daily life. Accessing consistent and effective mental health care remains a challenge. While the Department of Veterans Affairs, VA, provides services, wait times can be long, resources can be strained, and the stigma associated with seeking mental health treatment persists, preventing some veterans from getting the help they need. Tragically, despite the efforts of the VA and numerous nonprofit organizations, many veterans fall through the cracks in the support system. Financial instability is another critical threat. Veterans unable to secure steady work may rely on disability payments or small pensions. While essential, these benefits are often insufficient to cover the rapidly rising costs of housing, health care, food, and other basic necessities, particularly for veterans with families. Even in a relatively stable economy, some veterans already live paycheck to paycheck, teetering on the brink of homelessness. Homelessness among veterans is a persistent and serious issue, a national shame given their service. Tens of thousands of veterans experience homelessness on any given night in America. Factors contributing to this include lack of affordable housing, difficulty accessing supportive services, mental health issues, substance abuse problems often linked to self-medicating trauma, and challenges finding suitable employment. In the event of a major economic collapse, the fragile balance many veterans maintain would likely be shattered completely. Layoffs would impact veteran employment. Government funding for support programs could be cut, and the already strained resources of the VA and charities could be overwhelmed. The number of homeless veterans could skyrocket. Many veterans also lack strong social support networks. Frequent moves during their service can sever ties with family and home communities. The unique nature of military experiences can sometimes create a sense of disconnection from civilian society, leading to isolation. When the economy crashes and support systems weaken, these isolated individuals, already facing numerous challenges, could be among the first to lose their homes, lacking the family or community ties that might otherwise provide a safety net. It represents a bitter irony that the very individuals who risked everything to defend the country might find themselves abandoned and struggling for basic survival when they need support the most. Veterans have repeatedly demonstrated extraordinary resilience in the face of adversity, both during and after their service. However, resilience alone cannot overcome systemic failures or inadequate support structures. If America were to collapse economically, without deliberate, targeted, and robust support systems specifically designed for their needs, many veterans would be left fighting yet another difficult battle, this time, simply to survive on the streets of the nation they served. America's most vulnerable populations, the elderly, young adults burdened by student debt, service and gig economy workers, single parents, former industrial workers, and veterans, are facing heightened risks in the current economic climate. Each group contends with unique challenges, but a common thread of financial precariousness and inadequate safety nets runs through their experiences. If the nation were to face a severe economic collapse, these groups would likely be the first and most severely impacted, potentially facing widespread homelessness and hardship. From the seniors whose promised security is eroding to the veterans struggling with transition, from the indebted youth unable to launch their lives to the single parents balancing impossible demands, and from the essential service workers treated as disposable to the industrial workers left behind by economic shifts. Their situations highlight deep fissures in the American social and economic fabric. The reality is stark and demands attention. Ignoring these vulnerabilities is not an option. However, recognizing the potential for crisis also opens the door for proactive solutions and change. It begins with a deeper understanding of the systemic issues at play: wage stagnation, the rising cost of living, inadequate social programs, the challenges of economic transition, and the need for better support for those who serve or sacrifice. Supporting organizations that assist these vulnerable groups, advocating for policies that strengthen safety nets, promote affordable housing and health care, address student debt, and create pathways to stable employment are crucial steps. Building stronger communities that offer mutual support and ensuring that the promises made to seniors, veterans, and workers are honored are essential components of a more resilient and equitable society. The future is not predetermined. By acknowledging the risks and working collectively towards solutions, it is possible to mitigate the potential for widespread suffering and build a nation where everyone, regardless of their background or circumstance, has the opportunity to live with security and dignity. Thank you for watching. Don't forget to like this video, subscribe to our channel for more insights, and share this information to help raise awareness. Please let us know in the comments where you are watching from. We love hearing from our viewers around the country and the world. Stay safe and take care of one another.